A lot of people have questions, and I just thought, since we have you here, it might be worthwhile to actually entertain some of those questions. So again, this is a live show. I just want to remind you, thank you. Make sure you subscribe here to the channel. We're live here every single day. Make sure you go over and you subscribe to the 76 report. We have model portfolios there as well, where you can really help to, as Rob talks about inflation, as we talk about sort of all of this getting embedded into the economy, the reality is you want to be invested appropriately so that you're able to maximize your return and make sure that you have a little bit of that something someday. A lot of people, Flavius, a frequent viewer here on the program, is talking about stagflation. Is that what we're actually running the risk of in this environment? Do you fear stagflation, Rob?
Yeah, I think that's what was signaled today. You also had consumer sentiment data coming in negatively. It's you're going to have you could potentially have earnings growth in certain sectors, but really just because of inflation and just because of nominal growth in the economy, but real growth in the economy not delivering.
Yeah. Look, I mean, I think that one of the things that people need to remember too is that there is a way to sort of, and I hate to use the word play the market because it's not my style and it's not your style. I think we're sort of very sensible in our approach. So it's not like you're in and out. I often point out, hey, you're going to have to pay the tax on that anyway. So you don't want to go in and out too quickly, right? And make all this money and have to pay your taxes. But you want that opportunity to compound over time and to really have a few years. But a lot of investors, including so many that are watching this show right now, are saying, but wait a second, like I want to retire in 5 years. Like I can't take on risk in the equity markets. What do you say to that? I mean, we actually have portfolios set up specifically for folks like that, but I'll let you walk them through it.
Yeah, I mean, you have to think there's different kinds of risks, right? And when you think about inflation, there's risk of erosion of your purchasing power. So certainly if you own shorter dated fixed income investments, you have less risk of rising rates. But I think, people sometimes underestimate when they kind of think about retirement or they're entering in retirement, really just how long they need that money to last. And in the context of like longer term inflation, you are going to want to have that participation and growth that a diversified approach to equities can offer you to stocks. So don't underestimate the importance of growth, particularly if we are in a high inflation environment where, bonds as fixed income investments, they don't participate in the nominal growth in the economy. Your returns are flat, whereas you own dividend stocks, you own inflation sensitive stocks, they will grow. Even if, they're not necessarily growing in real terms, they'll grow in nominal terms. Trish,
Go ahead.
An interesting concept is that's unfortunately coming to the fore now is this idea of fiscal dominance, which is this idea that really, we've taken on so much debt as a country following the pandemic that the Fed, the authorities, they need to generate nominal growth in incomes and assets just to kind of service our debt and to pay these interest costs, particularly with higher interest rates. So that's sort of a theory that's always really been applied more to emerging market countries. And now, sadly, we're kind of maybe in more ways than one turning into an emerging market country where, we're characterized by high interest rates and this position of fiscal dominance where, the central bank actually has to generate nominal growth in assets and incomes.
I hear you, and it's pretty concerning in more ways than one. I mean, you look at the political situation. Obviously, it feels very emerging market-esque, very banana republic-esque. One of the folks here watching is making the point that and this is interesting, especially to you, that maybe Lockheed Martin is the one that you want to invest in. Rob, I've showed the viewers a chart of Lockheed Martin. It's amazing, right? You and I were looking at this together. Lockheed Martin, Northrop Grumman, like these things were left for dead. And then all of a sudden, 2014 comes along, the Maidan Revolution. We put a CIA op into Ukraine. All of a sudden, there's spending that's going into these companies that hadn't been there before. And what do you know? They rallied. They rallied really significantly. In fact, so significantly that I believe they outpaced actually where the S&P was, which is tremendous because the S&P is filled with tech companies, et cetera. And so that was really remarkable to me. I guess, what's your view on sort of this military complex right now, given that Yeah, I mean, I guess there's this idea that we're going to keep spending on these never-ending wars.
Yeah, well, what's interesting too is that all the kids now on college campuses are specifically targeting for divestment stocks like Lockheed Martin and others because of their because they do business with Israel, right? I don't think those moves, for various reasons that we've been talking about, are really going to go anywhere. But yeah, if you have a view that we're going to be in really a sustained, I mean, it seems pretty clear that that I was actually listening to a call recently on Lockheed, and they were talking about their backlog. So that business is not falling apart anytime soon. I'm not offering a recommendation here, but one of the
But
interesting,
it's an interesting one to look at. I hear you,
but
for
another
reasons
interesting,
that maybe we wish were not entirely the case. There's also perhaps some interesting newcomers to the market. You and I were talking recently. There was an article that went around about the sort of the VC money going into some of the new technology plays, and those aren't necessarily part of the public market yet. But I would imagine, and JD Vance has actually talked about this in an interesting op-ed in the Wall Street Journal recently. JD Vance, the senator from Ohio, that some people think could actually be the vice president on the GOP ticket. He's talked about the need for freshening up, if you would, our arsenal, so to speak, so that we're not sort of in a secondary position to China and some other nations. So perhaps in the future there will be more opportunity in that space. Kind of a weird thing to talk about, but nonetheless,
what,
reality.
Trish, it also feeds back into the inflation point. I mean, governments all around the world are going to be spending more and more money on defense and build up and running up their deficits and running up their public debt loads. So it circles back to this idea of printing money to cover your interest costs. It's a
Oh boy.
variable people are pointing to with big buildups in military spending, including in the U.S.
Yeah. Well, I just want to, again, give a plug for 76 Research, 76research.com. I encourage everybody to go there to subscribe, at least to the 76 report. It's $9.95 a month. And by the way, the great thing about that is you get all the back stock picks as well. So that's actually very worthwhile. You can look at the stock pick we were just talking about that's up nearly 14% since we decided to make this call. And then, of course, the model portfolios, which give you a larger base of picks. There are 10 to 15 stock picks. Rob, always good to see you. I'll talk to you soon, but thanks for taking the time with the viewers today. We appreciate it.
All right, great. See you.